the opportunity is insanely massive. Ignoring it for 5 more years could be the difference between, having a business model that is sustainable and not. The moats that those businesses had is past tense. AI is collapsing the sort of barriers to entry across pretty much every industry at different speeds. The ones that aren't are getting competed by their competitors. I'm not really worried about AI. Like, I'm in sales. Robots aren't going to take my job. And I say, yep, you're absolutely right. Someone using AI is going to take your job. For business owners who are like, oh, well, I'm in HVAC, or I'm in a physical goods or trade where that's just not a concern. It's like, yeah, no, it's totally not a concern. Like, the robots aren't going to directly take your job, but someone using the robots is. One thing that I tell entrepreneurs all the time is make yourself useless.
They keep hearing about AI, they keep hearing about Bitcoin, and they kind of keep putting it off. 5 years from now, what happens to that person? Welcome to the Polaris Signal podcast, where we spotlight business owners building durable companies and the real-world lessons that come with it. Today, we're talking about 3 forces that every business owner needs to understand right now and how they connect. AI is how you build. Bitcoin is how you protect what you've built. And then the eventual exit is how you finally cash in on it. And Scott today is going to walk us through all 3. He has been VP at Cantor Fitzgerald. He spent years in investment banking and private equity, and today he runs a Bitcoin advisory firm. He's also involved in AI, and he is one of the smartest people that I know, and he's going to help us all unpack all of this so it's practical and relevant for today's business owner. So, Scott, thank you for joining me today on the Polaris Signal podcast.
Thanks for having me. That's high praise. I hope to fill the shoes of the man you just described one day.
Yes, I'm so excited that you are on here with me. You truly are extremely talented and bright and experienced, and so I want to jump right in. Okay, let's say, Scott, that there's a business owner listening to this right now who's been running their company for the last 10, 15 years. They're doing well, they're profitable. They keep hearing about AI, they keep hearing about Bitcoin, and they kind of keep putting it off. 5 years from now, what happens to that person?
Yeah, that's a great question. So on the Bitcoin side, like, you can probably, as a business owner, get away with ignoring it for a while because you'll just, your business is successful. You continue to make fiat money and not worry about it, but you will be worse off. But the worse off in a business owner's perspective is like, mega rich versus super duper rich. That's not going to break their hearts. The AI question is much more existential, in my opinion. Like you mentioned, I've spent a decade kind of learning about really successful businesses across the private markets, advising them raising capital or selling, or being actually the one doing due diligence and investing in those businesses as a private equity investor. And the moats that those businesses had is past tense. AI is collapsing the sort of barriers to entry across pretty much every industry at different speeds. And so I would say on the AI side, ignoring it for 5 more years could be the difference between, having a business model that is sustainable and not. And I think that the right attention to the AI topic right now will eventually beget the Bitcoin question. But it feels, I don't want to sound the alarm, but I think the businesses that are leaning into AI right now are recognizing massive opportunities, and the ones that aren't are getting competed by their competitors. I have it's funny, socially, a friend will say, yeah, I'm not really worried about AI. Like, I'm in sales. Robots aren't going to take my job. And I say, yep, you're absolutely right. Someone using AI is going to take your job. And that is the anecdote I would use for business owners who are like, oh, well, I'm in HVAC, or I'm in a physical goods or trade where that's just not a concern. It's like, yeah, no, it's totally not a concern. Like, the robots aren't going to directly take your job, but someone using the robots is. And so it's definitely an opportunity to lean in. I don't like the fear angle. I actually think to take back like the, hey, you should do this right now because it's existential, I would say the opportunity is insanely massive. And the anecdotes there are many, but like, on my business, I would say the AI version of investment banking is $1 million less G&A because I no longer need a junior team of support staff, kind of doing the execution in PowerPoint and Excel and email and follow up, because the AI agent frameworks and the actual models themselves have just gotten so good that you don't have to hire those sort of supports. So very exciting time to be building businesses from zero, and certainly in the middle market, private markets, where you can be pretty nimble making these decisions.
Okay, so let's dig into that. Like, so what is the if you're a small or medium-sized business owner today, what does that mean if you take this theoretical idea of AI? What's like let's say the highest ROI that you can place your time and energy into right now that's not theoretical, that's like not what the future is going to hold, but like today, this quarter, separate from the hype, what
Yeah.
should someone be doing today?
Yeah, I think I have found that the only way folks really start to get it and say, "Oh my gosh, I have to pay attention to this," is they have to feel it. So you, as an entrepreneur, whether you've never opened ChatGPT or maybe you sort of play around with the chat interface, or you're like a Claude Code super user, the way you get to the end of that sort of spectrum is by using the tools. And so even if you're like entirely non-technical, just start trying to force yourself into those sort of interactions with the LLMs. I think it's a huge unlock for, I think a lot of folks logged into ChatGPT 12 plus months ago, or 6 to 12 months ago, and said, what is the weather going to be tomorrow? And they got like a pretty smart answer, and like, okay, cool, it's Google, without having to click on the first result. And myself included, the tools have gotten so much better. And I would say around February, there felt like this sort of terminal velocity point where like the frontier models are now insanely useful. And so that chat interface is good, but what really gets interesting is the agentic frameworks, like the harnesses, I like to call them. OpenClaw has gotten a lot of publicity. There's another one called Hermes, but it's basically the idea that you take that LLM, I call it like a two-dimensional interaction, where you put in words, you get words back, and you build on top of it this open source framework that allows it to actually go get things done. So you run this on a laptop. It uses a frontier model subscription, and depending on how much access you want to give it, it can like actually go do things. So an example for my business is if I want to, so say when this podcast comes out, like I'll get the link and I'll want to share it on my website. I will share that link with my agent via a Telegram message and say, hey, can you please add this as a media card on the media podcasts and appearances page of the Capital B Advisory website? And in a couple of minutes, I'll get an answer back. Hey, that's done. Go check it out. And it's just there. So I think that's a powerful anecdote. I think a lot of entrepreneurs are like, yeah, AI seems cool, I should use it more. And they're just kind of using chat. That is the tip of the iceberg. But I would say once you start there, you'll start to realize, oh, I should try to use this for like as much as I can. So that's where it started for me, and it ended with like agents running everywhere, and sort of being the, instead of $1 million of G&A, just add another laptop and another agent, and keep growing.
You are like very smart and technical though. I mean, is this really? Obviously, these tools are going to get better every day. They're going to get easier every day, and
Yep.
we've achieved this sort of like exponential curve where it's in a pretty extreme rate. They're getting better every day, but
It's
I feel like
intimidating.
for me personally, I'm kind of past the honeymoon phase where I'm like, okay, this is actually pretty time consuming. Like this idea of saving time is quite time consuming to
Yep.
save time. This like theoretical, and it's fun and it's interesting. And I do feel very hopeful and optimistic about the future and building practical tools for myself and my business. But I know a lot of business owners that are busy because they're
Yeah.
running a business. And so for someone that doesn't have a lot of discretionary time on their hands, is OpenClaw the right ROI, the best, highest lever to pull or
It's a great question, and one I'm helping folks with all the time. I would say, yeah, like as you use these tools, you don't just like spend more time at the beach or at the bar, or playing with your children. There's this concept that the Bitcoin world really likes, Jevons paradox, or Jevons. I'm not sure how to pronounce it, but basically that um, the more useful something becomes, the more it will be used. And so it's like, I have an AI agent now. I actually work more, not less, but productivity is also going up. It's an interesting paradox that I'm probably sort of bastardizing the full description. But the idea there, and applying that to business owners, is, hey, I'm too busy. There's two answers. One would be, listen, the old analogy of if a bear is chasing you and me, and I bend down to tie my shoes, and you're like, "What are you doing? We got to go. We got to outrun that bear." No, I don't. I have to outrun you. And think about, using these tools the same way, which is like you might benefit from slowing down in order to speed up. But yes, if you go into it hoping that this just kind of makes your job automatic, well, then you're probably wrong. And I would say that mindset doesn't usually exist among entrepreneurs. Typically, if they find an unlock for productivity, their creative mind consumes that excess capacity and finds new and wonderful things to build. That's what's exciting, is right. Like right now, entrepreneurs' biggest bottleneck is that they have to spend so much time doing the things that they don't enjoy that limit their creativity or capacity to generate new business. You free up some of that capacity, and all of a sudden you're like, oh, I want to do this with the agent. I want to do that. I want to build. And so I would say the two solutions are, one, make more time for the things that are important, which is like innovating with these products. But also, if you're an entrepreneur with a team that you trust, make it a part of your team's objectives for the next quarter. Hey, I want every single team member in the executive team to come back to me a quarter from now with answers on what we can do better with AI. And then let's go implement those, right? So the best entrepreneurs and executives are delegators. And if you can efficiently delegate, hey team, we need to have an answer on what we're doing internally with AI, then you can make that come to fruition without, necessarily having to devote some of your non-existent capacity to it as the sole entrepreneur.
That makes sense. Yeah, I think for me, to your point, being an entrepreneur, there's a lot of ideas, and it's very easy to have a lot of creativity. But then when it comes to execution and using the AI to execute on these tools, personally, I haven't really used OpenClaw that much, but I have been using Claude Code and building a lot of different tools, like internal team tools, to help automate a lot of our workflows. And I've thought a lot about the shift of instead of hierarchy, like workflow is the new version of hierarchy, where your business is heavily structured around workflows. And so how do we generate successful workflows that are as automated as they can be? And let's say we've got like 10 different tools we want to build. It's taking a while just to like get them dialed in, because it's very good in my experience building the first like 80%, and then it's very time consuming to get that last 10 or 20%. And maybe it's not that different from, let's say, building a house, or like if you've ever done a big remodel, it's like the devil's in the details. It's like that first 90% happens quickly with framing, and a lot of the what you see is like, wow, this is really happening quickly. And then when you get into the finished work, it's like, okay, things really slow down. How does someone really unlock? I mean, you mentioned delegating to someone else. How do they get that across the finish line so that things are really shipping?
Yeah, so a lot to unpack there. The first was that I listened. I think you're probably thinking of the same thing. I listened to Jack Dorsey on that podcast this morning,
Yeah.
actually, hierarchies and workflows. He's a weirdo genius, and it's so fun to hear him think through how these things are going to change. It
Alex
is
Hormozy has said the exact same thing. Both of those
Okay,
guys.
interesting.
Yeah.
Yeah, I am bad about keeping up on podcasts in that category of like entrepreneur, fintech, VC world. But that one came across my radar this morning, and I got through it quickly. And I thought the same thing. Like, this is interesting. I don't think it's going to change overnight, right? Like, I think at the end of the day, org structures still work because it's human coordination. And this dovetails into my thoughts on like, it's absolutely the case that the AIs are, every day they are the worst they ever will be. And also that first 80% is basically just 10% of the progress when it comes to time measurement now. And that last 20% is where all of the value is created. And that's where human judgment is still reigns king. And I think it will for the long term. The question though is, what differentiates, so like, and I've seen this as in helping people get, AI tools in place. If you are already a master of your craft, AI is a very powerful lever to make you better at everything you do and more productive, and also busier because you have other great ideas that you see into existence. If you are not, and you say, hey, make me money, AI, you become a slop cannon. And like, there's really not a better definition for it. Slop, like AI slop, is this idea of like people generating just copious amounts of content, none of which is really that coherent, or maybe just kind of misses the point. And then the canon, I just picture like Nickelodeon slime time, just like the green ooze just kind of blasting out onto the internet. And we're seeing that like there is signal and noise, and the noise and that ratio is dramatically changing with AI. I think that for the folks who, like, if you're an entrepreneur, then you're already an expert of your craft. Whatever your craft is, whatever your business is, you're an expert at it. Don't let AI become the last mile, but use it to learn that first 80% of progress now takes you 5 minutes. And then use that to apply all of your focus and effort to that last 20%, which is where you separate yourself from the robots and where you command a value in the marketplace and are able to generate profits for your business.
Hmm. So, okay, I want to shift gears slightly. So you had a great job and in investment banking and private equity, and you chose to walk away from that and begin Capital B Advisory, where you are advising companies and tying in Bitcoin. Bitcoin and AI feel to some extent like they're on a collision course where sound money is meeting exponential productivity. And, 5 years from now, there might be a gap between that business that has leveraged these tools versus one that hasn't. Can you share a little bit about like why you made this decision, and then let's get into Bitcoin, because I think there's a lot of, maybe even more than AI, there's a lot of folks that really just, it's over their head, they don't
Yep.
understand it, and I want to get into that side of things next.
So we start with the how. Well, the how and the why. Why would I leave a great job in investment banking? Early in my career. Um, it's really about the how, which is Bitcoin as a savings technology, a long-term investment holding, a meaningful portion of our sort of family assets, has put us in a position to take risks that otherwise would be unavailable to us from a household cash flow perspective. So that's the how. Leaving on paper an awesome job to do Bitcoin stuff is focused on exactly what you describe. I think that it was starting to become, I wasn't like super AI native while I was still sort of inside the machine, but it was becoming more and more obvious to me that this technology was going to be pretty impactful. And I have long sort of loathed the bureaucracy of large organizations. My grade school teachers would tell you that Scott has a problem with authority, which is why Bitcoin has been such a fun project to learn more about over the last decade, because it really resonates with me on a lot of different levels. But the AI opportunity is really bent towards smaller organizations that can make executive decisions quickly. Um, the adoption curve for these wildly powerful and useful technologies, powerful and dangerous, are usually synonymous. And so large organizations are not able to be nimble and start, giving every employee an unbridled access to Claude Code and the entire sort of software repository of their product. And so small organizations can do that. And so there's this awesome opportunity for competition among smaller organizations against bigger ones, because they can use AI faster and better. And then when I think about that intersecting with Bitcoin, I just like, the big thing for me is, we don't have time on this conversation for me to like lay out the whole Bitcoin investment thesis. But what I would say to folks who are kind of maybe hearing the word Bitcoin for the first, second, or third time, well, if it's the third time, you should reach out to anyone in your network who is a Bitcoiner and ask them for resources, because usually on the third touch, you're like, all right, it's time to study. And the resources that are available now are incredible. Joe Bryan has a video that I really like to recommend called "What's the Problem?" that really lays out, and he's actually an investment banker. So maybe it's a coincidence, or maybe I just think he's smart because he has the same job I do. But he lays out all the problems and explains how a sound money would solve those problems. And then, oh, here's Bitcoin as a sound money. Now, what that means for entrepreneurs is like, look, you can ignore Bitcoin longer than you can ignore AI, and all that's going to happen is you're just not going to have as much wealth. But if you're thinking about debasement in Bitcoin, then you should, or you think about debasement and inflation and your P&L changing, you should definitely focus on finding a better way to store profits in the company for the long term. And that, a lot of us, myself included, think that Bitcoin is a solution to that. Over any 4, 5, 6 year time frame, Bitcoin performs incredibly well against basically any other asset class you could compare it to. It's growing in adoption the same way the iPhone or the internet or maybe AI is growing, and so that has some signal that you should pay attention to. But I can't encourage people enough to study Bitcoin, but you have to study it on your own to really get there. And I'm certain that Jason, myself, or others would be happy to help you think through that as you look for resources.
I like the way you framed that, how it's important that they study it for themselves. I want to echo your suggestion on that video, What's the Problem? Because he never actually talks about Bitcoin. But because I think one of the big issues with Bitcoin is that you don't see why you need it if you don't understand the problem behind the scenes. So if you never understand the brokenness of money and the brokenness of central banking and the brokenness of the debt-based money system, then it just sounds like a investment and
Right.
another stock. And so that's one of the challenges of understanding it. So just to recap, AI, really useful tool, especially for smaller businesses. Bitcoin, really useful tool, especially for medium-sized businesses. Does that sound correct?
Yep. Yep. Absolutely.
Because they're probably profitable a lot of times, and they need somewhere to put that cash. And you've got folks like, the famous example is Michael Saylor, who's generating a lot of cash flow. And then they realize we need to do something with this cash because it's getting debased every day. The value of the dollar is going down every day. And he begins to explore sound money and digital hard money, aka Bitcoin. And so how are you doing this for businesses with Capital B Advisory?
Yeah. So we talked about it a little bit, but like I have learned over a decade of trying to do so, force feeding the Bitcoin thesis to people is a thankless and generally unsuccessful endeavor. And so Capital B Advisory exists to serve folks who have already come to the Bitcoin conclusion. I'm happy to help folks along the way, but my purpose in that business is not um, to drive that conclusion into people's heads. That's why I encourage the self-study, because ultimately only you can decide you need Bitcoin, and only you can study the economics of money, or even ask yourself the question, what is money? And then decide that if money is just a tool that we use to store our value, that Bitcoin might be the best tool for that job. And so Capital B Advisory exists to serve the very niche category of folks who think about the world the way you and I do, and many others, which is Bitcoin is our unit of account and our store of value. It is our objective in our careers to generate and store as much Bitcoin for the long term, to protect the purchasing power and wealth of ourselves, our families, and ultimately transport that value into the future. Once someone comes to that conclusion, they kind of lean in and have a mission to get as much Bitcoin as they possibly can, myself included. And so my thesis is there's really a couple layers to it. One is that there are people out there who own really nice businesses who think about the world in exactly the way I just described. That might come as a surprise to the non-Bitcoiner listening to this, but there are totally unassuming people walking among us who are just deranged, obsessed with accumulating Bitcoin as fast as they can. And I want to work with those business owners, because the second part of my thesis is that those business owners are the best operators in the marketplace. They have come to a conclusion that requires a level of humility and unlearning of a bunch of things. Questioning and then rejecting Keynesian economics, questioning what is money, having an open mind to what money could be and what is the best tool for that job. That journey, one, takes close to a decade to conclude, and really I would argue that journey never concludes. But also, someone that comes out the other side of that journey has such a unique worldview and such a unique perspective on value and business. They become, in my opinion, the best operators of businesses. So my thesis at CBA is, if you only want to work with the Bitcoiner business owners, by definition, you'll have this selection for the best business owners, the best businesses. And we're certainly early to that category. I think there's probably dozens total of sort of middle market businesses that need investment banking, M&A advisory, and capital raising services that fit that description. But two things: Bitcoin as an ideology, you only ever adopt it. Nobody ever really leaves our cult. And as that continues to grow, I think the TAM for my sort of opportunities at CBA goes to infinity. Because it's in some categories, it's just Bitcoin focused products and services. Businesses that are building in that space are obviously going to be more likely to be owned by a Bitcoiner. But also there's this long tail of businesses that have nothing to do with Bitcoin, owned by humble, quiet, successful people who are also obsessed with Bitcoin. And in both cases, they want an advisor who understands their worldview and their perspective on Bitcoin. So that's the thesis on CBA in not so many words.
So do you help, because you can help them sell their business, do you also help them think through the idea of how lending is evolving, especially Bitcoin-backed lending is evolving? And so, should you take on debt versus exiting, or what that should look like?
Yeah, exactly. And there's this like hero's journey on becoming a Bitcoiner. There's a similar journey on business owners who are Bitcoiners. And it's like at first you just kind of want to use cash flows to accumulate Bitcoin. Then you start to look at investment opportunities measured in the opportunity cost of buying Bitcoin, saying, okay, if I think Bitcoin's going to grow 30% next year and I can open a new store and make 10%, well, then maybe I shouldn't open that new store. So it raises your sort of hurdle rate and sort of implied cost of capital. The framework from which you make decisions on where to invest in your business shifts. Then the next category is, okay, well, I really like my business, but 95% of my wealth is tied up in this very illiquid sort of security or non-marketable security that is the private equity of my business. I'd like to sell some of that or borrow against some of that and put some of that value into Bitcoin instead. So you could take on debt against the cash flows of the business and manage against that, and you could use that debt to accumulate Bitcoin inside or outside of the business. Or the next stage would be maybe I'll take on a private equity partner, either in a minority or a majority position, and take those proceeds home and buy Bitcoin with them, so that I now have some value of wealth that sits outside the business in case this business does get sort of eaten alive by AI, or the return on invested capital gets to be less than the Bitcoin return. And then the final stage is like, okay, I've got this business. It's generating me 10% implied return on invested capital every year. And like, that's just not good enough for me. I want to sell the whole thing outright and buy Bitcoin with the proceeds. So I think, as businesses grow, the sort of growth profile and return on invested capital should decline. And I think with the Bitcoiner hurdle rate in place, when you get to that scale, you start to look at it and go, I don't really want to kind of just keep running this thing forever. I'd actually like to sell it because the Bitcoin opportunity cost is starting to really nag at me. And in all cases, that's sort of advisory work that Capital B does, because we're a broker. We're a licensed sort of representative, FINRA representative, to do investment banking, private transactions work in the U.S. for small and medium sized businesses in the middle market.
And what if you're not ready to exit, you're not ready to take on debt? What's the first step you should take in addition to learning about Bitcoin? Most small businesses, do you just start buying it on a regular basis? What do you recommend?
I think at a certain scale of small business, the personal balance sheet and the corporate balance sheet are kind of indistinguishable. In at that scale, like, yes, I think any person who's studying Bitcoin, one of the first things they're going to start doing is accumulating a little bit. And if they're lucky, they'll avoid the phase where they try to trade it or otherwise do unwise things with that position, because the smartest the smartest strategy, the highest return strategy over history has always been just buy and hold for the long term. But a lot of times folks have to learn the hard way that is the right strategy. And so, yeah, I think, as you're learning about something new like Bitcoin, whether an individual or a business, getting some is the start of that process. And as the business, like if you move up scale a little bit and you talk about a business that has, multiple shareholders, or maybe it's a common thing I see is like brothers-in-law, right? So their wives are sisters, or there's some sort of legal family relationship, and then they end up starting a business together. And then like dad or father-in-law is also an early investor, and one or two of their brothers in law are Bitcoiners, and maybe dads, in the cap table are sort of passive investors, and they're not. Well, that's a situation where, like, okay, now you've got to think about how you can allocate and not, anger the shareholders, the cap table. But definitely seen that dynamic play out, and sometimes what they're doing is kind of giving their parents and in-laws exposure to Bitcoin by just stacking it inside the corporate entity, because they know that it's a harder conversation to be like, hey, let's talk about Bitcoin on your personal balance sheet to somebody that's in their 70s or 80s.
Yeah, 100%. Okay, so let's say I want to try and get through all three topics here, and then we can kind of go wherever direction we want to go here. We've talked a little bit about AI. We've talked a little bit about Bitcoin. So let's say you've built built your wealth, you've stored your wealth, and now you want to cash in on that. You have a ton of experience here on advising businesses and selling their business. What are the biggest hurdles and challenges that you've seen when it's time for them to do that?
Many. One is that I think a lot of entrepreneurs, they grow their business to, let's pick a round number, pick $100 million, and they kind of have a sense for what it's worth because they talk with other folks in the industry and they know the multiple of earnings. They have a loose sense for what their EBITDA is. They've learned about that term one way or another. And then they say, okay, I'm ready to sell. And they finally answer that investment banker email or phone call. And they're like, all right, I'm like, let's do it right now. And the banker's like, yep, sure, we'll close in 2 weeks. They're lying. And it takes 6 months, kind of minimum, if you're doing like a full sort of sell side process. And so the lesson learned there is that there is no Fidelity you can log into and sell shares of your privately held business tomorrow. And that when the time comes to monetize the business, you should have been thinking about it for a long time ahead of time. Getting your house in order for sale is literally in many ways exactly like getting your actual home in order for sale, right? Are you gonna get beat up in due diligence on the roof being old? Okay, let's consider the opportunity cost of doing that ahead of time so that we can get full sort of market premium for the business, for the house in that analogy, when we go to market. There is a bunch of prep work that can be done, sometimes years in advance, and a lot of entrepreneurs ignore that until they're ready. They've had the scare, or the either the personal health scare or a near miss that would have destroyed the entire enterprise value of the business and the operation. And in either case, they're decided, like, I want to de-risk right now. That should not be the first time you've engaged with the concept of transaction preparedness. So that's a big lesson learned. I think folks learn the hard way. But when you're not thinking about selling the business, it's hard to allocate time. Like you talked about earlier, the scarcest resource of these entrepreneurs is their time. And they're going to set aside time to prepare for a transaction they're not ready for, not interested in, for maybe months or years from now. But the prudent preparation is to do that way ahead of time. So that's a big one I see often. And I think for Bitcoiner business owners in particular, when they think of the term investment banker, they picture horns and a pitchfork, because like we've, as an industry, have kind of villainized the investment bankers are the ones printing the money. At least in the type of investment banking work I do, you're talking about someone that helps you negotiate, the most important transaction of your life, right? These are not transactions, but they're the other important days. You get married, you have a baby, you sell your business. And if you think that investment banker means bad guy, you're not going to engage with those conversations ahead of time, or maybe even ever in the actual consideration of a sale. You might try to go at your own, and that's fine, I think. But at the end of the day, the same reason you want a realtor to help you, buy or sell a home, you should definitely consider at a certain scale having an investment banker help you buy or sell a business. And so, yeah, there's a lot to unpack there, but that's definitely one of the ones I see often.
Should I be thinking about my exit from day one? I mean,
I
like
think yes. The short answer is yes. I think that the businesses that do this right are thinking about it all the time, but they're not obsessed with it. And I would say one thing that I tell entrepreneurs all the time is make yourself useless. Like, if you're the key executive and you're the owner and the business stops when you go on vacation, you've got a real problem you need to fix before you ever go to market. And the analogy, or the sort of one-liner I use is like, if you are useless to the business, So it's what kind of shareholder are you? Are you an active shareholder or a passive shareholder? If you're a passive shareholder, you get paid cash. If you're an active shareholder, you get paid in contingent and earnout and other, non-cash forms of compensation that may not ever be valued. Private equity in particular loves to find management teams who are owners of the business, give them a deal that's just good enough so that they drive really nice cars, but they drive those cars to the office every day. And so you really want to make sure that as you're planning for that exit, you pre-answer the question from the strategic or private equity buyer, which is what happens when you get hit by a bus? You want the answer to be that, no one in your team is waiting on you to bless or weigh in on anything, and that the business really grows and hums without you having your hand on the pulse of every single thing going on. That's a huge one I see all the time.
Key man risk
Yes.
is the way I heard it described recently. I mean, I feel like one of the challenges, though, for a business owner is there's already so much to think about. And so thinking about this hypothetical exit so many years into the future, to use your real estate example, when you move into the house, it's not really time to start painting and getting curb appeal ready to go for the exit. You kind of want to just live in it
Yeah.
for however many years.
You live in it and make a mess as you please, but don't build a non-permitted additional dwelling unit on the back of the property. Right. So there's a sort of decision-making threshold around exit strategy that should, involve thinking for the future owner. And so like, yes, you can change the fixtures in the kitchen, no problem. That's not going to hurt the exit. But if you put an ADU in the backyard and don't get permission from your local government, you're going to have a real mess on your hands when you go to sell that business or sell that house. The analogy is
I
so
maybe
effective.
I maybe have never heard a more applicable analogy than that. That was fantastic way to frame it.
The house we live in now, and this will really rattle your non-Bitcoiner listeners. We rent it because we don't want to own the home equity here. But one interesting factoid about it is that the landlord is just a regular way corporate employee guy with a good job, and they have a detached garage. We have an attached garage. The way it is built, it can never have water run to it. And so it's a 2-story garage. It'd be great to have an ensuite upstairs in it. It can never have running water out there because of the way it was built. And that seems like a huge mistake in hindsight. And that's that's actually where I stole the analogy from.
Yeah. I mean, it's interesting. I think a lot about the analogies between real estate and Bitcoin specifically, not necessarily exiting, although I do think that a lot of times business owners don't realize how hard it is and how illiquid their business is, how hard it is to exit and how hard it is to remove yourself. In real estate specifically, I, like yourself, am thinking about storing my wealth in Bitcoin rather than in real estate. And so one of my rental properties, I went to sell it, and it literally took me about 2 years. So the aha moment of Bitcoin, the light bulb like really went off, and I went to my wife and I said, we need to change asset classes as quickly as we can. But we had tenants, and we had like another 9 months left on the lease, and then we had a few months of rehab because it had been rented for the last 10 years, and then it went to market, and then it sat on the market for a little while, and then we went under contract, and then it was like a scammer, and then back on the market. I mean, it literally took like about 2 years. And so what's that process typically look like for not for real estate, for business ownership?
Yeah. So let's say that you do what most folks do and you don't call an investment banker until you're really ready to go to market. Investment bankers are used to answering that call. And so they'll say, yes, we'll go as fast as possible. And maybe you can spend, with AI tools, maybe you can compress the pre-marketing phase down to 2 to 4 weeks. But that's the getting the house in order. You get, kind of marketing position financials. It's by no means an audit, and it's not really like tax sort of structure, reported financials. It's more like dressed up for a proxy for free cash flow, normalized for new ownership, or normalized for sort of profit driven ownership, versus like if you're a lifestyle business, you might have been kind of putting expenses in there that aren't really related to the business. So it's called quality of earnings. It's worth doing ahead of time at a certain scale. costs you some decent amount of cash with a sort of accounting firm to put together this report. You'll do that alongside the investment bank putting together it's called a confidential information memorandum. Let's call it 40 to 100 pages of detail on the business, covering the company, the executive summary, just sort of highlighting the whole opportunity, the industry it operates in, the growth opportunities in the business itself, a company overview, and then financial details. That's a bunch of slides that nobody reads, and the private equity associate pulls the financial details page out of the back, puts it into a one-page summary for his investment committee, and then they go from there. So then you go out to market, and the investment banker is contacting any number, between 10 and 200 groups across really three categories. This is for a majority sale. Private equity, private equity backed strategics. So let's say a private equity fund has already invested in a business in that space. It's a competitor to the target. You might go to them as a category, and then sort of vanilla strategics. So public companies or privately held businesses that operate in adjacent categories might want to buy the business. Those three categories represent your sort of buckets of investors. You go out to all of them, get them to sign NDAs. They read the CIM. They ask the banker questions. You get to sort of terminal velocity on like how many folks are looking interested, and you set a bid date for initial indications. That's a high level 2-pager, value range. Hey, I think the business is worth 5 to 6 times EBITDA, or maybe it's a number range, but it's usually pretty loose. It's not non-binding. You use those indications to invite a smaller group of people to come have dinner, break bread, and do a management presentation. Maybe you do that with a handful of groups, depending on how busy the process is. From there, you give them access to more information carefully so that you don't give away strategic secrets. And then you ask them, hey, give us your best and final by a certain date. And then from there, when they give you their best and final, they're going to want exclusivity, which is to say that you can't keep dating around. We are now engaged to be married. Then they'll do their confirmatory due diligence and negotiate, and hopefully not, but usually try to beat you up on price and other economic and non-economic terms in the agreement. And you're all sort of sprinting towards a close at that point. There's a lot of different places along that journey. It can pivot and go different directions, but that's generally like a broad sort of sell side M&A process for a privately held business.
How do you make sure you get paid if it doesn't close?
Yeah, so it's a masochistic industry. Basically, all of my economics, at least in the Capital B advisory business, is tied to a success fee event. When if Jason's the entrepreneur selling a business, I get paid when he gets paid, and that means that up until the day we close, you reserve the right to say, "I changed my mind. I don't want to do this," which means that I work for free a lot of times or close to it. We'll put depending on the risk of the perceived risk of an opportunity, we'll put a retainer in place that helps one make sure that the entrepreneur is serious about going forward with the transaction, and two, just kind of making sure that we can keep the lights on. But yeah, it's really just a lot of heartbreak. I like to joke that even the best investment bankers maybe enjoy their job 3 days a year, right? You close 3 deals, you had a great year. You close 5, you're kind of crushing it. And if you don't close any, then you didn't make any money that year. So for whatever reason, I think it's a lot like Bitcoin or maybe like, high stakes gambling. I really enjoy that one day each time you close. And then in between, it's just exhausting and really hard. But I've never heard of another job where on a success day, you cry tears of joy. And more than once in my career, I've been so overcome with joy that I have cried tears of joy on a closing day. So I haven't found another job that is that rewarding, but it is also very, very demoralizing the other 364 days a year.
It's smart to put a retainer in place
It
in some
doesn't
situations.
cover the bills, but it
Yeah,
at least helps, because what you don't want is a seller who's actually just kicking the tires, and he's not going to
for
actually
sure.
sell unless he gets a ridiculous
100%.
multiple.
Yeah, 100%. Okay, I want to rewind for a second.
Yep.
You said you and your family choose to rent your house instead of own your house. Why?
Yes. Well, a couple of reasons. So, we are in the young family phase of life. So we have a 13-month-old and another on the way. We're very excited about that. We live
Congratulations.
thank you. We're thrilled. You can't make more Bitcoin, but you can make more Bitcoiners. We are certain that we will outgrow the house that we live in now, probably around 2030. And we only moved into it 2 years ago. And so if we were to have bought it, we would have had to make a 7-year bet, levered bet on U.S. real estate, residential real estate, which is just an unacceptable risk profile to me. Housing feels insanely overbought, and it seems like both the left and the right politically in the US are very focused on reducing the cost of housing or increasing affordability some way or other. And so, I was not comfortable taking out, let's say 80% of the value of the home in a loan in order to bet on the direction of the price of that house overall over the next 7 years, versus taking that 20% that would be down payment and storing it in Bitcoin for the long term instead. Um, we made that decision and that trade, 2 or 3 years ago, and even with Bitcoin, crashed down to $82,000, it's been an incredibly intelligent trade. And I'm not claiming to be incredibly intelligent, but it's a pretty simple concept. Bitcoin, there's only 21 million of them. Houses, they keep taking the corner units and turning them into two houses all along the area. We're like a couple miles south of Charlotte, so we're like right around like a pretty densely populated area, and all these houses are going for like pretty expensive, and then every corner unit gets bought and turned into two houses that share a wall. And I'm like, isn't that kind of doubling the supply of the houses? So when I just think about supply and demand, the supply of Bitcoin is that there will only ever be 21 million. The demand it seems to be growing constantly. Housing, there seems to obviously be demand for it, but also the supply can grow in ways that I can't predict. So it's really just a better investment. And I'm comfortable with the fact that I don't want to live here forever, so I don't really feel a need to own it. Yeah, maybe I would do things differently with the ADU structure, but I'm okay with waiting until 2030 to do that with a home that we can live in for a longer period of time. I would say if you're going to live somewhere for under 10 years, it doesn't make sense to buy it, in my opinion.
This is a very contrarian view, though, because the narratives around real estate are safe, stable. The narratives around Bitcoin are volatile and extremely volatile. and so what was it that helped you make that, create that kind of confidence and conviction?
It would be at the time of making the decision, the biggest thing I leaned on was the prior 7 years of price data for Bitcoin, telling me that every time you buy and hold this thing for the long term, it goes up a lot. And a lot, not just like in nominal terms, but relative to everything else you might want to buy. There's a fun chart that shows like the price of the median home in the United States over 4-year periods, in 2012, 2016, 2020, 2024. And then below it, it shows it in Bitcoin terms based on the Bitcoin price on that same date, whatever, 12/31 of each of those years. And what you'll see is that the price of homes in Bitcoin terms is collapsing towards zero, and the price of homes in dollar terms is skyrocketing to infinity. And so I'm just choosing to hold that thing that keeps getting more valuable while I wait for that. I think Bitcoiners think about it this way. They want to hold on to their Bitcoin as long as they possibly can, and they only spend it when it becomes more important to them to have the thing that they're buying than it does to save for the long term.
Yeah, that's a good way of putting it. I think a lot about inflation when I think about real estate and the soft costs of owning real estate, and how you that's the tricky thing about inflation, is that you go, oh, number go up, bought it. So in my case, I bought one of my houses I bought for $186,000. Today it's like $700K. Okay. And you go, wow, I made $500,000. That's fantastic. Bust out the champagne. Except that I bought it in 2012. And when you factor in inflation, you realize I haven't really made that much money. And here's the other wild thing, is that Bitcoin is money and you can denominate things in that form of money. And so when you denominate in USD, which is inflating away, it looks like number go up. My home was appreciated by $500,000. What a fantastic investment. But when you denominate it in Bitcoin,
right?
Guess how much of a loss? It took a loss. Guess how much of a loss I've taken?
In Bitcoin terms from 2012?
Percentage. 2012,
oh,
yeah.
99.
Yeah, 99.99%. But I ran the numbers, and I realized that when Bitcoin hits $1 million, that it's going to lose another, like, I forget it's just it's like
another
that's
99.
just the start.
Yeah.
Like 99.99% is just the start.
Yeah. The hedge funder, I don't remember who coined this term, but down 99%, only another 100% to go. You always have another 100% to drop, right? And I think what messes with people's minds is that the dollar inflating means that more dollars buys less things. So what they end up thinking is that the things they're buying are getting more valuable, but like the house didn't get more valuable. The money that it's denominated in got less valuable. And one thing, like let's take Bitcoin out of the conversation for a second, because I think some folks kind of turn off like, oh, it's too volatile, I don't even want to think about that. Just go through your whole life and reanalyze the returns you've made on things like housing and stocks and whatever else, and go grab the price of gold from the entry and exit dates, and you'll realize that you haven't done as well as you might think. Now, I looked while you were saying it, I just looked it up quickly. Gold was like $1,500 an ounce in 2012. Now, I think your house might have outperformed gold over that time period, but not by near as much as it did versus, marked in dollars terms. So I think if people are not ready for the Bitcoin conversation, like you can start with just like, why don't you compare it to something that can't be printed? And gold also, has a really long track record of being money, right? The money of kings, if you crack the Bible open, you'll read about gold in there as well. It's been around a long, long time. And so you can use that to measure your returns and notice that it's not all actually growth. Some of it is a meaningful portion of it in many cases is just monetary debasement, not the thing getting more valuable, but the money getting less valuable.
Yeah, it's a great way of framing it. Okay, so wrapping things up, let's say I'm a business owner. I'm listening to you, Scott. I'm convinced, and I want to adopt AI. I want Bitcoin on my balance sheet. I eventually want a great exit, but I probably can't do all three at once.
Yeah.
So, if you're sitting across the table from me, where do you recommend I start? Do I start with you know, diving into AI and trying to understand it? Bitcoin is
Yeah.
its own infinite rabbit hole, and building a business also is a 24/7 job. So where does one begin?
I would start with AI. Yeah. If you've totally ignored AI, don't panic. You're still early, but start using these tools immediately. OpenAI's ChatGPT, Anthropic's Claude, both great tools. You could also use the long tail of others, but I think of them as like the Pepsi and Coke. Start chatting with it, and the real unlock is being humble enough to ask it questions about what you should be asking it. Saying, "Hey, AI, I don't know how to use you. What could I do?" And for my privacy enthusiasts, it's not like the super private way to use it. But if you want to tell it all about yourself, it'll have even more insights for what you might be able to ask it and what can we build. And I would say the reason I say that is because it didn't click for me until I just used it, right? So I said, okay, I'm just going to pick a project. I'm going to try to use AI to build that project, and then I'm going to see what I learn from that. And what I did was I'm a serial collector of domains. It's my only non-Bitcoin investment is I just buy domains and park them. GoDaddy loves me. I'm so bad at it. But one day somebody's going to buy me for one of these stupid domains and pay me for it, and it's going to return all the other losses. But I had a domain that it parked that I wanted to build a website on, and I've always been non-technical enough to where I was like, I'm not going to figure out how to do that. And I don't want to build one of these generic like templated websites until I realized I could do it with AI. So I start chatting with AI. Hey, I want to build a website. You need to literally, hold my hand through this. Give me specific instructions on where to take the information, where to post the files, how does it get hosted, blah, blah, blah. And I got through it in like 4 hours on a Saturday. And I was like, wow, okay, this is something that I literally was incapable of. And now like the site is live. It's bitcoinonliners.com. If you go to the resources tab, it has that Joe Bryan video at the top and a bunch of other book recommendations and podcasts. I'll probably need to add Polaris Signal and Bitcoin payments on there as well. But that was the big like, oh my gosh, this thing's as powerful as I want it to be. And so for me, that was like, okay, the main limitation on these tools now is the user. Once you accept that from a perspective of humility, you just start asking it questions about how you can use it, and you will kind of just be off to the races from there. That's the biggest, highest leverage unlock I would focus people on when they're just starting. The Bitcoin thing, look, you're an entrepreneur, you're probably pretty successful. You can explore the Bitcoin thing slowly. Just buy a little bit and hold it for the long term, and then start to study. I think it's hard to want to study about it until you've got some in ownership, and then you say, okay, now I should probably learn what this thing is because I own some.
It's kind of cool. Like, you can't ask your business how to run your business, and you can't ask Bitcoin what is Bitcoin.
Right.
But you can ask AI, how does this work? Where do we go from here? How do I use you?
Yeah. And
It's a cool unlock.
it turns the ideas guy into a results guy.
Mm. Okay, so Scott, how do people find more about what you're up to?
Yeah. So I'm very reluctantly back on Twitter, x.com. I took a 7-year hiatus. I learned a lot about Bitcoin on Twitter, but also it's a big distraction engine. But I'm back on there because it's good for business. So I'm at Bitcoin's Banker for the Capital B Advisory stuff. My main business is capitalbadvisory.com. Scott at capitalbadvisory.com if you want to shoot me an email. On the AI stuff, I am standing up a separate sort of branded business. Not ready to shill that, but if you reach out through Capital B Advisory, we can talk about that piece of it too. Because I've realized, one, I do have enough time thanks to these tools to run multiple businesses, and people really want help with the AI stuff and don't know where to begin. And so, in the answer to your question earlier, I didn't want to just be like, well, call Scott, but that is an option because we've started to realize that there's a lot of value in helping people build the same systems that we've built for CBA.
Amazing. And tell us more. What are you doing on the AI side for businesses?
It's
Before we wrap this up, I'm just
honestly,
curious.
it's the agent harnesses. It's Hermes. It's more Hermes than OpenClaw now. I think OpenClaw has pushed a handful of kind of fragile updates that have made it pretty unpleasant to work with unless you're highly technical. But basically, standing up dedicated laptop servers to run these agents and then helping folks like think through the different work streams that they can plug them into. I think the worst way to implement AI in a business is to go look at the business and try and re-engineer everything around AI. I think it's much better to engineer the AI sort of products and services around the way the business works today. And that's what these agent harnesses are best at. You basically treat it like a robot, like a digital employee, and you get its own physical laptop. You run that open source harness on there, you connect it to your frontier model, and then you start giving it access carefully and permissioned access to email, to your HubSpot, to whatever other server or services via API and other sort of computer language connections that allow it to like get things done for you. So the examples are so many, but like I have mine kind of scrub. No, I used the example earlier, right? I was just on this podcast. Can you please add it to the website? Boom, done. That involves giving it a bunch of different permissions and accesses, and I think that is the consulting work where it's like, hey, let's help you get all that set up in a way that doesn't risk the whole thing collapsing down.
Yeah, and that's why I haven't set it up myself, is the biggest fear is just the security aspect. I run a business and I can't play around with
You run a payments business. The stakes are very high. Yeah.
Yeah, the stakes are extremely high. Yeah, because every hacker in the world wants to hack my business, right?
So the way I approach this, one is like I'm much more carefully with a business like yours, but just in general, if you start with a blank laptop and give it permissions one by one, you know exactly what the attack surface is, and you can purposely keep it limited, right? So for your business, you might only have it get read-only access to an email, and it give you summaries of that inbox every day. Or you might just have it have its own email and say, hey, I'm just going to use you to get calendar invites sent. Hey, send Scott and me a calendar invite for 4 p.m. tomorrow. Voice message sent, calendar invite lands. Like there are things that don't touch the money that you can do. They are definitely less leverage than fully maximizing it and giving it every access to the business. And there's a spectrum of levels of access, but yeah, I think people are very nervous about these things getting compromised, but I would just challenge that concern and say every time you have a new employee and you give them a laptop, you have the same risk. Actually, worse, because that person could also just have their own evil intentions. The AIs, as far as we can tell, don't develop their own evil intentions. They're just sometimes subject to being phished or compromised by bad guys in the real world.
That's a great way of putting it. Scott, thank you so much for joining me here today.
Lots of fun. Thank you. Let's do it anytime.